Hi, and welcome again to another edition of Market Analysis for today, December 18th of 2024. This is a recording done by Vantage Markets by Giovanni Benacore, about an hour previous to the USA session open for today. All right, so let's take a look at what's been happening in the markets lately. Well, for those of you who might remember, the last time the Dow Jones Industrial Average had a losing streak this bad, Meatloaf's hit song 2 out of 3 Ain't Bad was ruling the airwaves. It's a sentiment being shared by investors right now. The S&P 500 and NASDAQ are up in December and trading near record highs. Yet the Dow has fallen for 9 consecutive days. It was stretched since 1978. But the historic slump isn't as concerning as it may first seem. It's not always the best indicator of the health of corporate America. The S&P 500's run of 12 straight days of negative breadth or more stocks falling than rising is more problematic. After all, the Dow only has 30 constituents and it employs a price weighting system as opposed to using market capitalization. That means if a company with a high share price has an extended slump, it leaves the Dow exposed, which is what has happened with United Health following the fatal shooting of an executive earlier this month. Things haven't been bad. 9 of its constituents have climbed over the period, including Apple, Amazon, Microsoft, and Boeing. In fact, Apple is closing in on becoming the first ever $4 trillion company. A recovery of any sort by United Health will likely snap the streak and even herald a more positive period for the index. The Federal Reserve and its interest rate path could keep it under pressure, though. President-elect Donald Trump may demand that Fed Chair Powell keeps cutting rates, even if inflation rises as a result of tariffs and other policies. Powell may well do anything to keep his job, but it's reasonable to assume, in the words of Meatloaf, he won't do that. Now, let's take a look at what we can come and speculate for today's market fluctuation. All right, so we see that the market had opened with a strong gap up after Friday's rally to all-time new highs, and it opened with such a strong gap up. It basically has been closed. Obviously, to be closed, we have to retreat all the way back to the high of 22,150. But nevertheless, it's most likely being closed, and around this area, this zone, which is almost halfway of the gap, is where markets particularly will rebound and then continue to move its previous trajectory, which is up. So will that happen? I'm just going to update the levels of resistance to 22,500. And then the second one, I'm just going to give it that nice psychological round number of 22,600. So that's our first and second resistance for today. Today, the market has fluctuated towards that level of support that we have here, and even a bit more than where it was. So 22,200 seems to be where the market have found support previously. So therefore, let's just make that our first level for today, and leave the one that we have already set there. Now, chances for the market to continue to rally up. I said again, it is today we're going to be having obviously the Fed cut recession. Will we have 25 basis points? If that's cut, then we'll see that the dollar index might have obviously lose some flare, and then if it drops, then we'll see a spike on gold. And now, will that bring that the stocks will rise? Most likely. Now, the other scenario could be that the Fed doesn't do a cut at all. And if that happens, we could probably see a correction on the assets. Dollar index rising, so therefore making commodities a bit more expensive. So that could be another scenario. So for now, I'm going with the trend, which is higher, moving up. Now, check this out. Okay, so S&P 500 has just opened with an extreme gap up. Now, how much of this is sustainable? I do not know, because we are in completely new territory. So therefore, I'm going to, let's just make that high at our first level of support, and then just, eyeballing, just selecting really another level that you could find. I like to use round numbers, so let's just use that. So, hey, if that's what the market is showing us today, that we have such a strong gap up, then, hey, go with it. The trend is your friend, so that's the whole scenario. Then the Dow Jones Industrial, let's see, the Dow Jones Industrial seems to be rebounded up of the lower band in the bond yields band so far. It did open with a small gap up. Now, I do have a resistance right at the 50-day moving average, where it had been just looking to overcome it. So let's just keep that as well. So our target will be 43,800 if it does fluctuate to the upside. But then if we do continue to see more move to the downside, then we're gonna be using our lower levels. So for right now, I'll be looking to continue that trajectory, which is lower. Then we have crude oil. What happened here? All right. So crude oil, yesterday it kind of fluctuated lower towards the 20-day moving average, but then recovered and closed not in the green though, but below the 50-day moving average that we have in here. So let's just use the 20-day inside the boundary bands, right? And let's just use this low here. With this kind of open, because I chose it because of such a high volume, because the real body is so big, so it's a lot of volume here, a lot of participation. So let's use that as a previous level of support, and then our targets continue to be the same. So let's see what will happen if the dollar index plummets. Then we'll see a nice spike on the commodities. Nat Gas. Okay, so Nat Gas is doing a recovery. So let's just update our levels of resistance. 340 first target, 350 second target. Let's use 20-day moving average within the Bollinger Band as a first level of support. And let's just leave this level right here, because this is basically where this doji rebounded off the 20-day moving average, and from here it began its trajectory upwards. So, and previously it was a level of resistance. So let's just use that as a probable level of support. So going long, buying. Then we have gold. So gold is just waiting for that number to come out. That's basically what it is. It's waiting for that number to come out and see if it'll break up to the upside. I'm gonna leave that resistance, which is where the 20-day moving average is sitting at, and then that 2680 resistance level of support, yesterday's low, and also this doji as a possible level of support. So depending on what that reading will be, we'll see a spike on that or a drop on that. Then we have silver, that is so far, okay, they just use the 20-day and the 50-day as a probable level of resistance, and you just kind of update to yesterday's low and just leave this one as it is. Let's see if again, whatever happens with the Fed conversation, we'll see either a continuation to this push lower or a rebound to the upside. Then copper. So copper is just trending lower now. So let's use that lower band as a first level of support, and that $4 round psychological number. Just add us right there. Let's use the 50-day moving average, and let's just use this high as second level of support or resistance. So will we be buying copper? If the dollar drops, yes. If the dollar doesn't, then we continue to move lower. So Bitcoin reached that milestone again, making new highs. So 110,000, I'm going to leave that as just because 102, and then I'm just going to use the 20-day moving average. So let's see if it'll rebound also again and continue to move its trajectory, which is higher. Then the currencies, they are just tight range. I mean, look at this. It's just really widening the range, but it's not doing much of any damage. So let's leave that low. Let's use yesterday's high as probable level of resistance, and just leave the levels right there as they are. So let's see what will happen with that rate cut decision. And again, if the dollar index drops, we'll see a spike on almost everything across the board. But if it does drops, if the dollar index spikes, we'll see things dropping. And if the dollar index drops, we'll see the commodities and everything else rising. Then we have the pound. And the pound is just looking a bit better than the euro. So it's right now is facing that resistance level. I'm gonna lower my second level to 127,800. I'm gonna raise my support to 126,400, and then this lows here. So let's see if we'll do a nice bump to the upside. And again, the dollar index is just in a range. So a breakout is definitely being set up. Let's see if it'll break up to the upside because of the reading, or will it drop because of the reading. All right, that's it for today. Have a great trading day. See you tomorrow.